with tokenizing assets, you can actually do this with pretty much any kind of non-fungible asset. And so, for example, I'll talk about MetaliCoin in a bit more detail in a minute, but MetaliCoin is looking at monetizing metal that's still in the ground, that hasn't been mined yet. Now, if you think about it, that's an incredibly valuable asset, right? But it's very hard to sell. It's very hard to monetize unless you're doing very sophisticated stuff and streaming arrangements, and it's not something that everyday investors have access to. So my hypothesis and my core contention to you today is that the next wave of really high value cryptocurrencies are going to be ones that are backed by something. And the why, I hear you saying, actually I hear you all saying I need more coffee, but everyone's still like that. Just wave at me at the back if you're still like, thanks guys. Why the hell is that the case? I'll give you one very simple reason. It smooths volatility. Now, volatility is great, and lots of people, especially high-volume traders, make a lot of money trading volatility. So you want assets with high volatility, and it's part of why I think things like Bitcoin and Litecoin will always have a place, because they're volatility plays. However, lots of investors want more steadiness, and an asset-backed crypto actually gives you smoother ride. Now, how does that work? It's really simple. If you've got, for example, a MetaliCoin, and it's backed 20% of its initial value in physical gold, silver, and platinum sitting in a vault somewhere, which is exactly the case we have today for MetaliCoin. At very, very worst, if the price of MetaliCoin ever went under the metal value, people would be trading in their coins for the metal. And therefore, other people would be bidding the price up until it reached the metal value. Because otherwise, I mean, the market can be irrational for a while, and there are arbitrage opportunities. Alan Greenspan famously said the market can stay irrational longer than you can stay solvent, and that's true. But in general, an asset-backed crypto, where you can actually make a claim on the physical asset with your coin, should have a floor on it at the value of that asset, right? So you might get a premium because there's demand in your token economy, and that's what you're hoping for. But the underlying value of the asset is pegged, of the crypto rather, is pegged to the asset. So I mentioned this briefly, but it is important to keep in mind the stuff in your bank account that you rely on to pay your mortgage and buy fuel and feed your family, it's hot air. It doesn't exist, right? It was created. I'm getting hot from the slide, sorry. It was created by the government issuing bonds and central banks buying, putting money out into the system. And it was created by the banks lending the money you've got on deposit out 9 or 10 times over. That's fiat currency. This isn't a conspiracy theory talk. There are advantages to this kind of currency. But what it means is the government can steal it from you really, really, really easily without you noticing. And they've been doing it really aggressively for a decade. They haven't called it theft because somehow if a politician gets up and goes, hey y'all, we're going to steal half your money, vote for me, it doesn't work really well. So what do? They get central bankers to call it quantitative easing. It's the same thing as pulling dollar bills out of your wallet, right? Because the government creates an unlimited supply. But if you actually look at the value, the buying power, I thought I had a graph in there that I don't. If you actually look at the buying power of a dollar over the time since we went off a gold standard in 1972, $1 today is worth about 20 cents in real money. And that's simply because governments back it by hard air. In the old days, money was backed by gold, right? I don't know if anyone's old enough to remember. I'm not quite. But I know that you could walk into a bank, any bank. Australian banks did this. Certainly American banks did this. They all had a gold window. You could walk in with 35 crisp, clean $1 bills, put that down on the desk in the gold window, and they would give you an ounce of gold. True? Anyone remember this? This is how money used to work, right? It was actually backed by something. You know, there was a reason that the Americans had Fort Knox protected by half the friggin' US Army and the Marine Rangers, because it was their actual store of wealth. That isn't the case anymore. It hasn't been the case for 45 years. Some people are arguing to bring it back, but it's unlikely to be the case in fiat money anytime soon. And first generation cryptocurrencies were very, very similar. They were backed by algorithms that are actually more secure than government fiat, right? If the algorithm says there will only ever be 21 million Bitcoin, guess what? I mean, you can fork the thing every 3 months and issue new currencies, but there will only ever be 21 million Bitcoin. There's no authority, there's no government, there's no regulator, there's no central bank that can issue more Bitcoin. It's just that simple. And what that means is it's a deflationary currency. The value, as people use it, of the currency goes up and its buying power goes up, right? Now you think about that. The value of an Aussie dollar or a US dollar goes down, right? We have inflation every year, even if it's very low at the moment. The reason it's low is because we have incredibly low interest rates and quantitative easing. The governments keep printing more money. You cannot do that with crypto. So even when people tell you that Bitcoin and all this is backed by nothing, you can say, well, it's actually backed by more than fiat currency. It's backed by more than US dollars or Aussie dollars. But it's still digital hot air. There's nothing real behind it. And so what you do get is a speculator's paradise. And we've seen that numerous times already, even though the crypto market is really only 2 years old. We've already seen 3 or 4 major crashes, bubbles, crashes, etc. And as I said, I think we're seeing another correction now.